Hey everyone, and welcome back to the channel. Today we're doing a quick 2-minute breakdown of what's happening in the gold and silver markets. We'll look at the key factors that are making waves right now and what you should be watching over the next few weeks. So, what's the big story? It's all about US data. Recently, we've seen a stream of economic reports coming out of the United States, and the markets are definitely paying attention. A lot of this is catch-up data, but it's painting a picture of the U.S. economy's health, and that has a direct impact on precious metals. Let's start with gold. Gold has been trading in a bit of a range, reacting to every piece of news. When we see strong economic data, like better-than-expected job numbers or rising consumer confidence, it tends to strengthen the U.S. dollar. A stronger dollar makes gold, which is priced in dollars, more expensive for foreign buyers, and that can put downward pressure on its price. On the flip side, any sign of economic weakness or uncertainty can send investors flocking to gold as a safe haven asset, pushing its price up. Now let's talk about silver. Silver is often called gold's little brother, but it has its own unique personality. It's both a precious metal and an industrial metal. This means it's influenced by the same monetary factors as gold, but it's also sensitive to the health of the global manufacturing sector. So when we see positive signs for industrial production, especially in areas like solar panels and electronics, where silver is a key component, it can give silver a nice boost. However, if there are worries about a global economic slowdown, that industrial demand can dry up, weighing on silver's price. Looking ahead, the key thing to watch is the upcoming U.S. inflation data, the CPI report, and any statements from the Federal Reserve. The Fed's stance on interest rates is probably the single biggest driver for gold and silver right now. If inflation remains high, the Fed might keep interest rates higher for longer. Higher rates increase the opportunity cost of holding non-yielding assets like gold and silver, which can be a headwind for prices. But if inflation starts to cool down faster than expected, or if the Fed signals a pivot towards cutting rates, that could be the rocket fuel both metals need to break out to the upside. So to sum it up, keep a close eye on the U.S. economic data releases, watch the U.S. dollar's movement, and pay very close attention to any and all communication from the Federal Reserve. The next few weeks are shaping up to be very interesting for gold and silver. The interplay between safe haven demand, industrial demand for silver, and the Fed's monetary policy will determine the direction from here. That's our quick take on the markets. Hope you found that helpful. If you did, make sure to hit that like button. And for more updates like this, don't forget to subscribe to the channel. Thanks for watching, and I'll see you in the next video.